Daniel, Eric, thank you guys so much for joining us today. You are the essential piece of a successful online enterprise and potentially one of the most misunderstood sections of it, the part that brings the most joy and the most angst. So I'm excited to bring it all together so that all these individuals involved in online marketing, e-commerce, whatever the case may be, can kind of put all the pieces together to envision the whole process of merchant processing. Thank you, guys.
Absolutely. Go ahead, Dan.
Hey, thanks for being here, Trevor. So we wanted to kind of take everybody through what merchant processing is and kind of an explanation of how you get started in this business, right? How you start your first business. For the purpose of this, we're gonna talk people through kind of the very basics. Yeah. And Eric's been doing this for over a decade, so I'm gonna let Eric explain basically what merchant processing is and what happens when somebody goes onto your website and they enter their credit card number to make a purchase.
Right. And just a note, I'm a private banker, and I qualify that because basically I want people to understand that I'm looking at it coming from a different point of view. I'm not looking from the outside looking in. I'm looking from the inside looking out. And I think that one of the big misnomers is that people don't really understand what merchant processing is. Why do we have a discount rate, and what does it mean, and how are those transactions? What's really happening behind the scenes? And basically what's going on is that what people don't know is that every transaction that happens during your credit card transaction is actually a microloan. And what's happening is when somebody signs up for a merchant account, what they're asking the bank to do is to allow them to have microloans, many thousands of microloans a day. That's what the discount rate is for. So it's the discount that the bank buys the microloan at. And that's why that's there. So when people get upset about the fees or something like that, what they don't realize that happens is that when they swipe that card, they're getting access to a worldwide network that says money coming from different countries or different denominations all around the world. They're going to buy that loan from you for 2-3% or less. And that's a fantastic thing. And then what they do is that once they process that, they buy it, they pay you off. So they front that money. That money that goes into the account isn't actually your money. It's the bank's money, because they're financing on the other end with the person who has the credit card, and they're going to make payments on it. So what happens is that the bank is actually fronting money on both ends. And that's a lot. That's a lot of money to put out there, and then with the potential of not getting paid. So again, that's where the discount rate comes in. And of course, then you have your transaction fees. So there are multiple fees, and there are small things that are in it, say that everybody works together. So you have the rails or the network that everything rides on. Things have to integrate into it. So there's whole organizations and companies that integrate from the merchant side into the banking side, and that make sure that everything runs seamlessly. A good analogy for that is basically like the electric company. How many people walk home and they turn on the lights and they sit there and they think about the whole electric company, the grid, everything? You don't think about that. You just expect it to work. And the same thing with the merchant processing. There's a lot of moving parts, and there's a lot of money that's being outlaid there to make it seem so easy and seamless. So when people ask me, they say, well, why is it so expensive? Well, you know what? For the reality of what really goes on, it's relatively cheap. The next thing, like a utility, they're going to think of merchant processing like a utility. We don't have, it's not a right, it's a privilege. And not everybody qualifies for something. And that's really where Daniel and I come in, is that those individuals that have very unique, brilliant ideas, like a lot of the people that you guys work with, they come in and they have wonderful ideas, but they really don't, they're the square peg trying to fit into the round hole. And what they need is they need somebody that really understands what it is that they're trying to do. For example, if we take the electrical analogy, you don't stick your washer, you need the 220 volt. You can't stick it into the 120. You need a specialized system. So you call an electrician to come in, and you need a specialist. And that's what we do. We take a look at, say, for example, like the appliance, and we say, this is what you need to plug into. So we need to make a gateway or a modification for you so that we can plug you in correctly so that you're processing correctly. The last mistake that most people make is they wait till the last minute. That's the killer. Because they don't understand, because again, they think it's a privilege. And they say, oh, I'll just go to the bank, get a merchant account, put the money in my bank, everything's, no, it doesn't happen like that. Because we have to qualify them. We have to see a history. We have to see everything that's going on to make sure that the person, when they're floating the money on the back end and they're floating the money on the front end, they got to make sure that this person fits in their matrix and that this is a good fit, and that we got to manage and mitigate that risk there. So, and that's what really goes on there. So that's all the stuff that happens behind the scenes that we take care of and we help navigate for people that they don't see. For them, it's filling out an application. We go through it, and then we make sure that people don't get declined. So we don't have just one relationship, we have many relationships. So it becomes a one-stop shop to really tailor-make a process or a utility for them that fits their business type.
So when we talk to the new Shopify business owner, if we go through the process of setting them up, right? Day one, they set up their store, they're ready to sell, but they need a merchant account. So they say, okay, Shopify, here's my social security number, run my credit and issue me a merchant account. And Shopify goes, okay, here, sure, have a merchant account, right? So they start doing business, right? And the business runs a little ways. And let's say they're drop shipping and they're bringing these really amazing products in from China, and they start selling them to their customer. And the money that they make from their customer, they're turning around and financing their business. Well, Shopify comes along and they say, well, you're drop shipping from China, right? We didn't know that when we first agreed to set you up with this business. So we've decided that we're going to hold 25% of your money, right? And that 25% of your money can really be a soul-crushing thing to any business owner, because it was so easy to get in and get started and make it work. They thought, well, shouldn't this just work right away? Why do you have to hold 25% of my money, right? And then they go along a little bit further, and that 25% of the money that they hold is like staggering their growth, right? They don't have somebody to sit next to them and plan through that. And then it comes to a day where, let's say they're not drop shipping anymore. They're shipping out of their own warehouse and they're trying to grow their team, and they need special financing to grow their team. Well, Shopify is still holding 25% of the money, and you guys want to start doing some new tricks to, let's say, increase your profitability. So you want to start doing sales funnels and click funnels. Well, you can't use Shopify Pay there. You have to set up a new merchant account, right? You have to set up something else that's going to take a really high portion of your money, and they're going to put you through the same process. They're going to put you through the 25% reserve after you get a little bit successful. Well, let's say one day you get, a few chargebacks. All of a sudden they jump the reserve to 50%. And now the bank is holding 50% of your money. So what we do here is we kind of guide people through that process. We're kind of like a financial Sherpa. We give people the goalposts that they need to reach in a way to be financially profitable, but not have to have the bank hold 25, 50% of your money or run the risk of getting shut down, right? So most new business owners don't have a degree in finance. They don't have the ability to watch every day to make sure that customers are meeting the exact policies and payment policies and all of these different things. So one day they start getting chargebacks, right? So they've lost their product, they've lost the money, and now the bank is imposing fines and penalties on them. And it gets to a point where they can't, either they get pulled off Shopify Pay, or they get they have to find a different payment solution, right? So part of our service offering is we structure that for people. So I'm sure that you interviewed the guys at CartHook. We work really closely with the guys at CartHook to structure upsell programs. So when your customers want to, let's say, offer a discounted product after the sale, you need to work with a merchant services team or some private bankers that can set that up so that you can continue to grow your business without getting these huge reserves. So when we talk about kind of a really perfect startup business, like your absolute perfect business going from day one to day, your first $2 million, we shoot for a zero reserve business.
Right.
That means that your business is ran in a financially sound way that the bank approves of, and you're managing your chargebacks, your customers are happy, you're getting good feedback on the banking side, and you run with zero reserves, giving businesses the maximum amount of capital to kind of grow, maintain that growth, be able to hire more employees, create more jobs, and really just build something with their own hands.
Right, right. And the flip side to that is that those accounts that are aggregating accounts are actually doing an opposite of the traditional banking policy. And in
Like
no way, yeah, in no way, shape, or form would somebody ever charge in a traditional sense more than a 10% reserve, and that would be up front, and it would only be temporary until the person proved themselves. And the difference is where they put the risk. The difference is that the processor is saying, I'm going to take risk on these transactions. Hey, I got a transaction, please buy this from me. But that's not what's happening with an aggregator like that. What they're saying is, we're saying we're not going to underwrite risk. And everybody thinks that's great because anybody and their mother can go in. Well, what people don't understand is when you don't have a dedicated account, you're lumped in with a pool of a bunch of other knuckleheads. And so risk is looked at on a more global scale of all the accounts that are within that one aggregated account. And that's why it's so scary, because one bad apple can take out 1,000 accounts. So that's why they do the 25%. Yeah.
A great example is if Eric's selling apples and Eric starts getting a bunch of chargebacks on his apples and I sell apples, all of a sudden, for perfect performance and really great performance, his reserve becomes my reserve because we're both selling apples. And this is the reality of a system like Stripe, or these kind of introductory business incubators, right?
Just so that the audience knows, when you talk about an aggregate account, you're referring to Stripe, PayPal, Shopify Payments, etc. The ones where you don't go through an underwriting process, the ones where you can start up right away and get going. So just to make sure that everyone's clear with that.
Absolutely. And just to clarify, the biggest key component in that is who holds the risk. What those aggregators are doing is they're asking the merchant to take all the risk, the client. In a traditional account, what we do is the bank takes the risk. And that's huge, because the bank is going to take loss. So they're going to put fraud protection. They're going to have a matrix running that measures everything. For example, and I'm sure everybody has, you've been out, you're traveling, you make a purchase, and all of a sudden your bank calls you and says, hey, did you make this purchase on this card? It's a little unusual. And you say, yeah. And they say, okay, we let it go through. Okay, the aggregator accounts don't do that. They don't monitor it like that, because they benefit when they get to hold 25% of your money or 50% of your money. That's where they make a lot of cash. And then you got to imagine you have hundreds of thousands of accounts in there, and they've got a big old bank account over there holding all these reserves, and they're getting interest on it. Okay, that's where a lot of the money is. Okay.
Can I throw something out there real quick for the audience? It's a really interesting concept, the way you described merchant processing earlier. With the previous business, we would fund security accounts. We would sell the account off to a bank because they would have signed a 60-month contract. If the customer defaulted, if they stopped paying, they would come after us for that money. But when you get a merchant account that's underwritten, et cetera, if the customer stops paying on that credit card, they don't go after the merchant.
Absolutely.
And that requires a more thorough underwriting process. That's the risk that you're talking about with the bank.
Exactly. That alleviates a huge headache, because there's always that potential. You always have that holding over your head that at any moment that reserve can come, or they can shut you down for any arbitrary reason. When you have a traditional account or a specialized account like we put together, you're going to have a contract, and you're going to know everything up front. We're going to hold your hand, walk yourself through the process and everything, so that you know exactly what it is that you're entering into. And a lot of the philosophy is how to be preemptive. Everybody's always waiting until something blows up. In our system, one of the things that is really core to it, much like Daniel and one of our other partners who's not here today, is that we monitor the accounts daily. We look at our eyeballs are on these accounts several times a day. We're not waiting for the report to come out the following month and say, oh, gee, I wish I would have, should have, could have, because it's too late. The other thing is on that risk is learning not only how to mitigate that risk, but to spread it around. Everybody always talks about a backup account. Well, you shouldn't have a backup account. You should already have 1 account, 2 accounts, 3 accounts, 4 accounts, because you have different opportunities. And that's what we can help with, is certain amount of volume should go to one or another, but you should never be in a situation where everybody thinks linearly and they think, well, I lost this one, now I got to get another one up. No. Let's have 5. Let's say if you're going to do 2 million in a year, or you're going to do 2 million a month, if you're doing over 100,000 a month, you should have more than 1 account. We should spread you out for liability, because if they freeze the money for any reason whatsoever, if it gets held or whatever, you could say, you know what, I don't want to process that. And it gives us a chance to go in and negotiate and say, hey, we have leverage. We got this guy spread out over 4 or 5 other banks. Do you really want to lose this business?
And a perfect example, right? Let's say your business is really, really successful. And when you experience a huge bout of success, if nobody has expressed that to the bank up front,
absolutely,
what happens is they put 100% holds on your money for 90 or 180 days, which can absolutely be crushing to a business. So the reason you kind of go through a traditional banking process and you have multiple accounts is so that you can spread out that liability, so that you're not all of your money is not withheld from a single bad event, right? If 5 people walk, let's say your store does 1,000 sales a month, right? And all of 10 people charge back, and let's say they were fraudulent, right? There was some stolen, a wave of stolen credit cards that just got through.
Which
right?
happens, yeah.
Which happens, right? Happens all the time. In that case, Stripe or an aggregate account would instantly freeze your money for 180 days. And then they would withhold you receiving any more money until they had time to review that account.
Well, actually, they have up to 18 months. Per card services, they can hold it for almost 2 years.
Okay, so 18 months of hold. So that, it's fine. It's fine in the beginning to work with these kind of introductory account services, but ultimately, if you're serious about developing this into a business, you need somebody on your side that you can call and say, hey, we're about to do this Labor Day sale and we're really, really going to kill it. We need a little bit more room in our processing, and we need a little bit of help on the fraud detection.
Absolutely. So what we do then is they come to us and we can sit there and advocate for them. And because of the relationships we have as bankers, we can call them and we have a sit down with them. We say, look, this is the numbers don't lie. This is the progression. This is the projections. This is what they're going to do. This is what they have in place for their, chargeback prevention, fraud protection thing. And we give advice to the customer. We're not one of these people where they fill out the application and they say, okay, you're on your own. Go with God. We sit there and give them support and advice. It says, you want to structure it this way, because the other part of our firm does financial services. So they get that free when they talk to us, because we want them to be successful. So that's the key, again, is mitigating the risk before they enter the situation. So you don't have to worry about cleaning up the mess. We help you avoid it.
Love it. So let's talk about how this actually looks for the people who are watching. Not everyone will qualify right off the bat for the services that you guys provide. So at what revenue, gross or per month, annual or per month, should someone reach out to you guys? What does the process, so 3 questions. When should they reach out? What does that process look like? And what do the people who got shut down by PayPal, Stripe, and Shopify payments right now, what are their next steps while we're watching this?
You want to take that one?
Right. So let's deal with the people that have the blood spurting problem. If you're shut down, call us right away. Right. We can get you placed with another bank and get you up running pretty quickly.
What contact information do you want us to put down below the video?
So they can reach out to us at the privatusgroup.com, right. And there's a button that says work with us. And for the referral source, just put ecomcon, and that would be the best way to have somebody reach out to you right away.
Yeah, and you're not going to get a salesperson. You're not going to get a customer service guy. You're going to get one of us. and you're going to get that concierge service where we're going to greet you, talk to you, ask you what's going on and what your goal is. We want to know what the person's vision is and where they want to go. They're not the ones who went to Harvard or something like that, and went to business schools. That's what we all had to do. So
just to put a plug in real quick, like I work with these guys, and when we have a big launch, anything like that, I usually feel bad for all the work that they put in. So this is legit. This isn't, this is part of the love of EcomCon that we're giving out, because obviously we want to keep, we don't want to spread them too thin. But guys, this is the service. This is how you get up to 7 and 8 figures. Absolutely. Is by having a relationship like with these guys. Just FYI.
Yeah, we wind up being, like he had said before, your Sherpa. We're your guides. We're going to help you navigate in territories that you've never been in. I'll give you a really good example. There was a company, my brother was the head of political affairs for DineEquity, which is the parent company over Denny's and Applebee's. Now, they have $1 billion a year in purchasing power, but what a lot of people didn't know was that components of it still ran like a mom and pop shop. Their technology was way behind. They just weren't as sophisticated. And you wouldn't know that. You would expect that they, at being able to have $1 billion a year purchasing power, they'd be more advanced, and it's not. And my point is that limits the access or the opportunity or the protection that's offered to them in that stratosphere. So when you have people that are coming in doing a mom and pop shop and they're at $50,000 or $25,000, there's mistakes that you can make that aren't going to harm the business. But when you start getting into those larger numbers, you really need to watch out for certain things. You really need to understand what you can and cannot do, that it doesn't make you a target, that it doesn't make you a target for, say, for example, getting audited by the IRS. It doesn't make you a target for credit card fraud. It doesn't make you a target for getting shut down for chargebacks. We had another large company that had a lot of chargebacks. They pumped up to 2.53%. Card services limit is 1% and under. Now, in any other situation, they would have given them a reserve or shut them down, especially if they were on one of the aggregators. They called us immediately. We got on it. With 2 days, we were looking at it, and it was escalating. We called the bank, and we said, look, we have a situation here. We're tracking it down. We kept the bank apprised, and they worked with us on that. And at that 1 month, they went up to roughly about 3%. By the next month, we were able to bring everything back down and within control. And they said, you guys did great. We appreciate having you guys, watch out for your merchants there. And everything is fine. They didn't get a reserve. They didn't raise the rates. And they have a solid account. And that's the benefit of having an advocate for you on the inside.
So as far as understanding at what point do you want to reach out and have this service, I think once a business has developed to the point where they're looking to upsell on the checkout, I think that's an interesting technical way of defining it, when you're looking to upsell your customers on things after checkout, because you need to bring in a financial team like ours to set up that gateway and configure it for you. Or anybody who's kind of gotten to the point where they've gotten their business off the ground and they've hired, let's say, their first 1 or 2 employees. Mm-hmm. Once you have 1 or 2 employees working with you, and you're doing things beyond your direct control, I think it's pretty important Absolutely. To have somebody watching your financial future. Another kind of major thing with the holidays coming up is that fraud comes in waves. One of our clients got a very large string of fraud perpetrated by one individual that stole a number of credit cards, right? And at that point, under any normal circumstances, they would have been shut down by Stripe, or they would have been shut down by Shopify Pay or PayPal, and they would have lost the money right out, right? Well, some of that was legitimate fraud, and we helped them put in place a fraud detection system, and we were able to talk the bank down. The bank kept them in business, kept them running, kept everything up, healthy and compliant. On the other side, some of it wasn't legitimate fraud. They were just customers that had misunderstandings where we had done the due diligence, the customer had done the due diligence, and it was, legitimately their money. And helping customers kind of work through those complexities really is an important factor to having a successful holiday season, especially in e-commerce.
Yeah, and one of the things to add to that is, as far as the consulting goes, is when we look at somebody's website, we're not going to sit there and say, oh, okay, he's on his own. We help them mitigate that again by looking at the website and saying, and the information that they're putting there, and saying, hey, in our experience, we found that this is going to create a problem down the line. You know, you might want to have it look like this, you might want to have it say this, or the languaging here, or this is going to create some vagueness and whatnot. So that's actually one of the things and people take it as us being hard on them or being stringent. No, we're being successful. We're making you bulletproof so that things can be thrown at you and you're going to weather the storm because your ship is going to be strong. You're going to be able to head right into the storm and you're going to be able to weather through it because you have a couple of people here navigating you through these tough financial times. Okay, and that's what we're after.
And just to throw it out there, like this isn't some esoteric theory. Dan built a Shopify e-commerce site that went up to $30 million a year before you exited. So yes. You know what's up.
Yep. And we got all the way to $30 million a year with Eric's help and with the Privatus team's help with zero reserve.
Yeah, zero reserve.
Zero reserve.
Yeah. And they've run into some tough situations that we were able to negotiate through. Absolutely.
So incredible.
Yeah.
Good job, guys. All right, so we're gonna post links down below to that. Lastly, is the question that I have here in conclusion. We've got international sellers, and they typically feel handcuffed, like they have to use PayPal. Mm-hmm. They're not qualified for, say, 2Checkout or Braintree or something like that. Is there an opportunity for international sellers to work with you?
As far as
they're not U.S. citizens.
Yes. We have relationships internationally throughout the Pacific Rim and throughout Europe. So we're very strong internationally also. So if you have the international sellers, that's fine. We can get them accounts, usually wherever they're based. And we can also facilitate with them getting incorporated and setting up the corporations that they need to in order to do that.
So in Europe, I believe we work with Barclays, and they set up institutions there. So if you need to start a corporation in the EU, we can set that up. We can do it here in the US. We can work in South America, Canada,
Hong Kong, Singapore, Africa, throughout. Yeah.
Yep. And for any customer that wants to operate a business from the United States, we have a global multi-currency platform that will allow customers to purchase in their native currency from anywhere in the world, and it will reconcile through Shopify. So we have that ability today, whereas everyone else charges a much higher exchange rate. There's some complexities. Shopify Pay will flat out decline certain international jurisdictions. So we have a much wider reach than they do on that front.
Right. Let's break it down into simplest terms. So say, for example, somebody has a business here and they have to be here domestically and they want to sell to a European market. Now, card services, what they've done is just like the region codes on DVDs, you can only do and sell merchant services or transactions if you live in that region. So what you do is you create a footprint there by creating a corporation so that there you have a presence there, and then you set up an account there, and then that money gets deposited in a European account, and then you have to sweep that money, bring it over to the US, pay double taxes. It's a mess. Okay. So what we have here is an opportunity for someone to have one account. They go on a multi-currency platform. They can receive payments from Europe, and they can in the euro, and it will automatically switch over into American dollars. That transaction, it will not only shoot over here, but it will hit the exchange rate. You're not going to have to pay exorbitant exchange rate fees and get deposited as American dollars here in the States. Real easy. We're the only ones who have this.
Amazing.
Yes.
That's awesome, guys. Okay, everybody. So remember, go to the Privatus group. Sorry, I always say Privatus. Okay. Go to the Privatus group. That's Privatus group.com. And for the referrer, type in EcomCon because you guys do not accept referrals outside of your existing clients.
That is correct.
All right. Is there any closing words that you want to share with the people before we close this?
you want to go? Don't be, yeah, well, go ahead. Go ahead. I'll go.
Make sure to install your fraud protection early and price your products with fraud protection in mind. Set your prices high and work down, but always make sure that there is an understanding that 1 in 100 might just disappear with your product and your money. So always make sure to build that into your margins.
Yeah, and as a courtesy to the whole organization here, don't hesitate to call us if you have a question. We're happy to answer. It doesn't mean you have to sign up. Let's work with us. There's no obligation. We're happy to support you. If you just want to ask a couple questions, reach out to us on the website, and you'll talk to one of us, and we'd be happy to sit down with you for 30 minutes or so and really walk through your vision and support you. If you decide to go with us, great. If you don't, that's fine too. But we're here to see you.
Guys, thank you so much. Appreciate the time and for breaking it down. I don't think I've ever spoken with any sort of merchant services provider that's broke it down to that level, and especially not ones that understand the business. And that's the biggest thing. It's like the professor that teaches entrepreneurship that never started a business. That's typically how I feel when I start working with merchant service providers, right? So really appreciate it, guys. Thank you so much. We're going to link down below. We'll go from there.
Thanks, Trevor.
Thanks, guys. Chat soon.